Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about 3 companies that you can buy once and hold forever. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. For our first company, we have Procter & Gamble, which is an American consumer goods corporation headquartered in Cincinnati, Ohio, and they've been around for over 185 years. They specialize in a wide range of personal health and hygiene products such as Tide, Charmin, Tampax, Gillette, Old Spice, Pantene, Febreze, Crest, and my personal favorite, Dawn. And believe it or not, that's not even close to all of their brands. Procter & Gamble has well-diversified existing brands along with the ability to complete acquisitions of new products and companies. And taking a look at Procter & Gamble over on Seeking Alpha, we can see that in the past year, they're up 15.48%, which is fantastic, and they're actually approaching their 52-week high. In the past 5 years, they're up 57% on a price return basis. In the past 10 years, they're up a whopping 107%. To get a better idea of what's been driving this growth, we can look at their most recent investor presentation. What we can see here is their organic sales grew by 4%, while their core earnings per share were up 16% versus the prior year. For such a large company, this is very impressive how they're able to keep growing their revenue. Now, one thing that makes me very confident about Procter & Gamble's future outlook is actually this graph right here. So you can see here in 2023, they had no problem at all continuing to increase those organic sales. And in 2024, so far, they're doing an amazing job with that as well. Now, on the other hand, in 2023, their earnings per share actually declined in the first 2 quarters, and then they started increasing afterwards. But we can see in 2024, it's been very strong, up 17% and 16% on a year-over-year basis. Now, looking at their guidance for 2024, it does not worry me at all. We're seeing a growth of 4 to 5%, which of course is not crazy fast for sales growth, but that's to be expected with a larger company, and it's still very solid for the company. And looking at their core earnings per share growth, we can see that they're expecting an 8 to 9% increase in that. Now, aside from that, something that I do really like to see here is they are planning on paying over $9 billion in dividends for 2024, and they're also doing share repurchase of about $5 to $6 billion, which is amazing. Taking a quick look at their financials, we can see here that in 2019, it was sitting around $67 billion of revenue, and now fast forward 2023, we are sitting at $82 billion of the revenue, which is an amazing increase compared to 2019. Now, as we would expect from their investor presentation, their earnings per share have been increasing very quickly over time. We can see right here how steep that graph has been for them. And with those share buybacks that they've been doing, you can see here that aside from those first couple years, they actually have been increasing the amount of shares outstanding over time, which is great because it does raise your ownership in this company. Now, an important metric to take a look at when analyzing a company like this is their free cash flow per share. I want to see a company that's able to grow their free cash flow over time, and we can see it did very well at first with that, but did have a sharp decline in 2021 and 2022. But now taking a look at 2023, we can actually see that they're back on track, sitting at $6.78 per share. So I do look to see where it's going to go in 2024, and I think that'll be a good indicator of the company's future prospects. And taking a look at their dividend stats, this is one of the most impressive things about this company. They're sitting at a current forward yield of 2.33% with an annual payout of $3.76. That puts them at a payout ratio of right around 58.27%. And with their 5-year growth rate of 5.58%, we can see confidently that it does outpace inflation. Now, in terms of dividend growth, this company has been increasing its dividend every year for the past 67 years, and that does put it at a dividend king. Now, just to get a better idea of their payout ratio, we can see here they're sitting at 58.7%, which is what we saw before. But if we look at their cash flow payout ratio, that is the amount based on their free cash flow per share, it is sitting at 49.2%, which is very healthy. And if we do take a look at their dividend history, we can see here that the graph extends so far back that it's not even covered. Right here, 1989 is the last year we can see, but they have in fact paid 67 years of dividend payments. The second company we'll be talking about today is Visa, and Visa is an American payment card services corporation headquartered in San Francisco, California. It facilitates electronic fund transfers throughout the world, most commonly through Visa branded credit, debit, and prepaid cards. Now, Visa is the world's second largest credit card processor behind China's UnionPay and processed an estimated 283 billion transactions in 2023. There are over 4.3 billion Visa cards in use globally and over 130 million participating merchants worldwide. Now, one distinction I do want to make is that Visa is not a credit card issuer, but rather Visa partners with various financial institutions such as Chase, Bank of America, and Citi, who issue Visa-branded credit cards to their customers. This reduces Visa's risk since they are not the party responsible for fronting the money used for credit card transactions. Moving into Seeking Alpha, we can see that Visa has had a phenomenal year so far, and I do personally hold this in my investment account. Their 5-year performance is also very strong, and in the past 10 years, Visa has actually managed to outperform many of the stocks within the S&P 500. Now, if we do take a look at their financials, this company basically has it all. Their revenue has been increasing very quickly over time, aside from in 2019. And similarly, their earnings per share have seen just as quick of an increase, if not faster. Visa has been buying back their shares fairly aggressively, and this graph doesn't do the best job of showing how much they've been putting into it, but they have been picking up as quick as possible. And my personal favorite metric to look at when analyzing Visa is actually their free cash flow per share. This company is a free cash flow producing machine. This company produces so much cash flow that sometimes it has a difficult time deciding what to do with it, which is why they've been growing their dividends so quickly, which we'll take a look at in 1 second. As we can see from their dividend scorecard, their dividend yield currently sits at a pretty low 0.73%, and a lot of that has to do with the recent price appreciation that the company has had. Their payout ratio sits at under 22%, which is extremely healthy and shows that it has a lot of room for growth remaining. Now, most impressively, their 5-year growth rate sits at 16% and shows no signs of slowing down anytime soon. This is a very profitable company. With their 15 years of consecutive dividend growth, it'll only be a matter of time before they're a dividend aristocrat. Now, what I do want to show you with Visa is their yield on cost. Even though their current yield is sitting very low at 0.73%, your yield on cost would have been sitting at right around 4% if you would have bought this company 10 years ago and held it till now. This is because of the rapid growth this dividend has seen, and if you would have held it since IPO, you would actually be sitting at a yield on cost of almost 13%. This company is actually expected to continue to grow very quickly, and we can see here their forward-looking growth for their revenue is right around 10.55%. And possibly investors' favorite reason for investing in this company is their profitability. Their gross profit margin is currently sitting at an astounding 97.78%, and that is one of the highest profit margins you will find within the S&P 500. And the third and final company I want to talk about today to buy and hold forever is Coca-Cola, ticker symbol KO. The Coca-Cola Company is an American corporation founded in 1892, and through their many acquisitions has become the beverage giant that we are familiar with today. Their products are sold in over 200 countries worldwide, with consumers drinking more than 2.2 billion beverage servings per day. Coca-Cola is a well-diversified business within the beverage market, selling both alcoholic and non-alcoholic beverages, as well as waters, teas, and soft drinks. Their product portfolio consists of more than 3,500 beverages and 500 brands, with some of their more notable brands including Dasani, Fairlife, Sprite, Fanta, Fused Tea, and of course, Coca-Cola. Taking a look at their most recent quarter highlights, we can see the company has continued growing over time, which is always something you want to see with these big companies. Their net revenues grew 7% for the quarter, their operating income grew 10% for the quarter, and their cash flow from operations was up 5%. If we take a look at their past year, they've traded fairly flat at minus 0.88%, which is something I'm not very concerned about at all. I'm confident this company will be here for a very long time to come. And aside from the dip during COVID, the company's stock price has continued to increase nicely over the past 5 years. The same can be seen for the past 10 years, but it has been at a slightly slower pace. As we would expect to see, they have been able to continue increasing their revenue over time, and the same can be said for their earnings per share. The amount of shares outstanding has actually remained relatively flat, which is something I'm not concerned about at all. And taking a look at their free cash flow per share, it actually is sitting higher than what it was in 2019, but it's actually not its highest year in the past 5 years, which is fine. And moving into their dividend stats, we can see their dividend yield is actually the highest of the bunch, sitting at 3.21%. Their pay ratio is sitting at a healthy 68.4%, and their 5-year growth rate for that dividend is at 3.5%. This is a little bit closer to the rate of inflation than I would like, but it's still not bad and it's definitely keeping up nicely. Similar to Procter & Gamble, their most impressive stat is their dividend growth history, and it's sitting at an impressive 61 years of consecutive dividend growth. This company does tend to take a more conservative approach when it comes to dividend increases, but for us investors, what that means to me is that they're going to be able to continue growing this dividend for the next 10, 20, and hopefully even 30 years. Now, their cash dividend payout ratio does sit at a slightly high 82%, but the more important metric to look at here is their cash flow payout ratio, and based on that, their dividend is easily covered by their free cash flow. Now, graphing these companies versus the S&P 500 for the past 5 years, we can see that Visa does come out on top, sitting at 88.4% total return, with the S&P 500 trailing it by a little bit at 81.3%. Procter & Gamble follows them at 78.5%, and Coca-Cola comes in last at 54.3%. Now, of course, as we did look at before, in the past 10 years, Visa has beat these other companies by a large margin. As always, that does bring us to the end of today's video. I do really hope you guys enjoyed those insights into 3 stocks that you could potentially buy and hold forever. Definitely let me know down below which of those was your favorite, and if you have any other companies that you would buy and hold forever instead, also leave that down below. Other than that, if you guys did enjoy today's video, definitely subscribe to the channel. I post weekly investing videos, and if you haven't watched my latest video, check it out right here. If you are interested in seeing how much I earned in dividends in the month of February, check out this video, and I will see you in the next one.